Now, I'm here in Orlando Hard Rock Hotel with three of my friends and colleagues from the Golden Circle, all self-made property millionaires. We're going to discuss with them why real estate, why they're passionate about it, and how they've become successful in their field. Paul, I'll start with yourself.
Hey, how you guys doing, man? Good to be here with you, Chris.
Great to have you. Now, Paulie, tell us a bit about yourself. Where are you from? When did you start real estate? And what parts of real estate do you specialize in?
Well, I'm from Nashville, Tennessee. I've been in real estate 12 years now. And we specialize in fix and flip. We take a distressed property, one that most people wouldn't even look at, and then we make it look like a magazine cover. We go in there, it's about speed of implementation, velocity of money, get in, get out, do it right. And we're passionate about it. You have to have a vision, and a lot of people in real estate get excited about that vision. So I could see the end result when I'm looking at it in the beginning and it looks all dirty and ugly. I could see the end result. So that's kind of like my art.
And I follow your posts and stuff, and you see what you start with. People go, there's a lot of hard work. You actually see opportunity. You create a fantastic product at the end. Absolutely. And you also make money. But it comes down, I think, knowing you, your work ethic and your hustle is second to none. And you just like getting your hands dirty and working about real estate. And 12 years, so you've been doing it for a while, and you've made millions through doing it, and your passion comes through. Now, Ty, you run a business as well. Now, I fell in love with your slogan recently, which you put in. Do you want to tell everyone what that slogan is?
Absolutely. I'm a managing partner for Key City Capital, and our slogan is connecting capital to wealth.
How good's that? Yeah. And what part of real estate do you do? How long have you been doing real estate, and why do you like real estate?
So that slogan kind of fits in with what I've been doing in real estate recently. I started out 10 years ago in real estate, and I really didn't have a set business plan with what I was going to do. I just said, I'm going to get in real estate. I'm going to make money in real estate. And for about 6 years, I found that was a struggle because I didn't have a direct plan of action as to what I was going to do, what I was buying, and how I was going to exit each of those investments. And 3.5 years ago or so, created a new business plan, started building out from there. And within that plan, I wanted to build generational wealth for myself and all of my partners and investors that came in and partnered with us. And that plan just continued to manifest and ended up being something that I realized that we're taking each of our partners' capital, cash and seed money, and turning it into wealth. Everybody that's invested with me now is set for a couple of generations at least. And so that was kind of what ended up becoming connecting capital to wealth. Legacy was something that was always within my mind and real estate and what I wanted to do. And so I don't buy and flip. My strategy is buy and hold. And we do that in a couple of different asset classes. And so I've taken what we were doing for a long time that was just transactional, buy and sell really quickly, and made a decent amount of money doing it, but I didn't really build a generational plan with that. And so now it's everything that we buy, I'm holding long-term, 7 to 8 years, fully maximizing depreciation on it. And that's turned what was a couple $100,000 business a year into multiple millions in real estate holdings.
Which happens when you get the right experience, but I think it's what's common with both of you, and I think with Pedro discussed, it's having the right team and the right structure. And I always say in real estate, there's no wrong or right way. There's a very popular way is buy and hold.
It's so different. I mean, you could intertwine. A lot of people say, which is the best strategy? Well, what's the best strategy for you? What do you want to do? Like, you could flip, save the money and buy things for cash, buy apartment buildings with it. So there's no wrong way. Every way is good. I actually buy and hold myself too. But I love creating, so I'm more of a creator guy. I like to take something that most people would not go near and then just develop that. But Ty's way is a fantastic way to build that generational wealth that he talked about. So that's why there's really no right and wrong way. There's just angles, different angles.
And you talk, Ty, about generational wealth. You talk about legacy, which goes hand in hand. But the point I wanted to make, and we'll discuss with Pedro now as well, with real estate, people say, this is the best way because I promote this way. I've seen people in buy and flip, invest in capital, do developments, and also we're going to go into you, Pedro, all of them very, very successful. I think it's about getting the right team of people behind you, find a strategy that you can resonate. Because I actually develop stock for myself. I buy and hold for myself. Predominantly my business, which is what I just wrote a book about, is buy and hold, long-term generational wealth building. But what Paulie does is great, However, it's also risky if you don't know what you're doing, because ours is a little bit easier because you buy and hold. You got more time to wait the market out. Now, Pietro, tell us a bit about yourself and how long you've been doing real estate for over 20 years, like myself as well.
Yeah. And I started in construction, and I transitioned into real estate, and I would buy small homes and get my construction workers, to fix them up. So I realized that if you wanted to leap forward and get the best value, so you buy properties that needed a lot of work. You turn them around, you put a little bit of work, and that appreciated greatly. So I repositioned properties, and then eventually I transitioned into bigger properties. And my strategy was more of a buy and hold. And as I got into more properties and they accumulated, I discovered the value of leverage. And leverage is such an awesome tool.
Big
and what I mean by leverage, for some people who don't know what it is financing property, because it's a tool, it's a vehicle. Real estate is a vehicle, and you wanna use it to its maximum and move forward and grow your portfolio and do more different things. You pull out the money tax free, and that's what's so great about real estate is when you're leveraging property, you don't have to pay tax as long as you invest the money.
So in Australia, it's very similar with developments. You got to roll the money over quick, but at the end of it, you got to pay tax. And obviously, I don't know the tax breaks in America. Our laws are different, but I guess it's important to highlight what you said, leveraging, because they said to Einstein, what's the biggest, he said the power of understanding how to compound your wealth. And interest is very important. Those who understand it earn it, those who don't pay it. Yeah. So if you leverage your wealth, now I know your portfolio's in the tens of millions of dollars now, right, and it all started with 1-2 deals.
That's right.
But leveraging on other people's money, and Kiyosaki talks about it too, other people's time, other people's money. And it's important to understand those principles, but also too, the different strategies. There's 4 people here with different strategies that all work in different countries. But what I do want to ask all of you, why real estate?
Real estate is, I want to say easiest, but it's maybe because I was in construction. It's not the easiest if you don't know anything, right? But it's just a great vehicle. It's a great vehicle, a great investment. And, if you have a bit of a mind that can see, can see a bit of the future, you can reposition real estate within, your economy or your sector.
It's tangible. A lot of people put their money in stocks, which if they know what they're doing, that's fine. But you got like something you could see, you could touch. It's concrete, it's sticks and bricks, and that's, you have something to look after. It's solid.
Main thing also is banks love it. Banks love it. You can finance it so easily. That's what I meant by easy. Is that banks will mortgage your property or give you money on it, depending on what situation.
What sort of borrowing is in America, Ty? What sort of lending? So if I bought a house for $1 million, how much deposit would I need?
To buy new, and if you're buying just a single house, you're going to need 5%, but I would never do that as an investment.
No.
Right.
Or more like a first-time buyer.
Insurance. And with the commercial space that we're going, not just commercial properties, but as a business and buying property as a business, minimum equity that I have in it is 37%. So I do 60. It is. Yeah. 63% is what our total portfolio looks at. And so
that's super strong.
Yeah, and also if you're going into the bigger real estate and the multi-unit and stuff like that, banks don't even look at what you're worth, or they'll look at it to make sure you're not a criminal or you're not making monkey business. But they actually look at the economic value of the real estate rather than
the numbers. The numbers matter. It's if you don't know what you're doing and you get into this, you can get hurt. But if you have the proper coaching and things like that, you need a team. Absolutely.
40% LVR means it's very strong.
Absolutely. Hugh Hilton from the Hilton family said this to me one time, that you basically, to build wealth, this is how the Rockefellers built their wealth in the United States. This is how Trump built his wealth. But you buy property, and property is going to go up in value, always. It's always going to go up in value. So you continue to recycle that. So if you go in and you have 35 to 40% equity in your property, you hold it 5 years, you refinance, the property's gone up by 15, 20% appreciation, you refinance, so you're constantly pulling that equity back out tax-free. So now you've got more seed money to continue to utilize. You always have 35 to 40% equity in your properties, and you just continue to build from
Leverage more. When I was younger, I over leveraged, and I always talk about, in Australia they say location, location, location. I say affordability. If you've got a good loan to value ratio, so good deposit, you don't pay lenders mortgage insurance, but also you're not subject to the market volatility. So if you're leveraged to the hilt, and we talk about banks, the reason banks love real estate, in my opinion, what does banks do? They assess risk. If they're willing to give you 90, 95% on something, they know it's safe and secure. Now, I'm very fortunate to be from Australia. We have one of the best property markets in the world. Every 7 to 10 years it doubles, and it's a very strong market. But when you look at any banks, and they'll say 95%, it means it's safe and secure. But a good thing that I talk about too, and you're in a very good position to be able to put 37%, you're very safe, because if the market goes slightly stagnant or down, you can afford to ride that wave and not lose money and still make a lot.
Because he bought them right. You have to buy them right.
You have to buy right. You have to understand how to buy right. But then, I said 6 years I did transactional. I was doing fix and flips the whole time, and I realized that was a big risk. I had my own construction company at the time. I started out with a master's in accounting. I left that, wanted to get into property, started a construction company so that I could understand the whole process. But I knew that, with just starting out and no prior knowledge in real estate, no family history in real estate, that I was risking the market. If the market crashes...
What made you say, yes, real estate sounds great, let me
I read Rich Dad, Poor Dad, right? And I saw all, I'd always admired the business that Donald Trump had built. Whether you like the guy or not, I admired the business he had built, right? Yeah. And so I knew that real estate was a pathway to wealth. And so I got in it. And
what was that? Your path to wealth?
My path to wealth.
Brick by brick. You had to bring in the book. You had to bring.
Connected capital to wealth. We're wealthy here, right? And real estate does that. And after a few years of doing it, I realized I wanted to meet 4 keys to that wealth in real estate, and that was going to be cash flow, appreciation, equity, and then tax shelters. And there's no other investment that you can get in besides real estate that will offer all 4.
That's
and
a
the
great point.
long-term hold process is what gives you all 4 of those as well. If you're getting in and out quickly, and you're not very efficient like Paulie is with it, and understands the ins and outs of that entire business, then you can lose your shirt. But if you know if that's what you do and that's how you're going to do it, and you have a perfect process at doing it, then you can do really well. But I wanted to be able to capitalize on all 4 of those.
You said a big thing, because the difference, a property investor, which is what we do, you buy well, because the money in real estate, people, is when you sell, it's also when you buy. But more importantly, it's easier for us to what Paulie does, which is speculate the market. It's so difficult that you need the right team behind.
I actually don't speculate the market. I'm in and out before 6 months even come up.
Waiting 7 to 10 years, Paulie, is a lot easier to make money than what you do. That's why having the right.
Because
he buys right. That's why.
But when you buy right and you're in and out quick, it really doesn't matter, because think about this. I buy, right? The market's not going to shift in 6 months. So I already know my exit strategy. You know what I'm saying? Does that make sense?
It does, but you're downplaying a little bit, because you've got expenses, you've got taxes, you've got so many things you need to account for, which is why I'm saying that strategy is tougher to make money quick, because so many things can go wrong. We've got more time to wait it out. Not that there's one's harder than... Actually, that is harder in my opinion.
I understand what you're saying.
Can I add to that? So right. I think Paulie's strategy is a great way to create cash flow, because you're in, you're out, you're cashing out. So it's a great vehicle for that.
Yeah.
I think you should be a little diversified, a bit of a long term, which Paulie is.
Which we are.
He has a long term. And one thing you have to be careful though is a lot of people buy speculating that Airbnb is going to be. They factor in their economic value Airbnb, and that's something that is a little touchy today, because it's disrupting the market, and a lot of people I think it's smoke and mirrors.
Well, there's regulation coming in already on it,
because people have to be careful with that.
So many counties in the United States, I've seen so many people, I'm going to get into Airbnb, and they don't know, they don't have that plan built out.
I'll give you an example.
They don't have the data.
The economic value, let's say you buy one property and you say you can rent it for $2,000, normally with a 12-month lease. $2,000, but Airbnb, you're going to say I can rent it for $6,000. But what if the regulations change and you can't do that in that area or that city? You're kind of
seen that time.
You know what? You said the same. It's having the right expert advice, because in Australia, the law, the compliance is changing, APRA's tightening lending. When elections come, buy sentiment becomes more negative, and having the right team of people behind you is paramount to everything that you do. So with me in Australia, I've got a team of people behind them, whether it's someone in a mortgage broker, a real estate agent, someone to look after, and the right accountant that can give your tax variation forms, the right breaks, when you sell it, how much capital gains tax do I pay, a financial planner, because buying an asset's one thing, but insuring against risk, income protection, what if they trash my property, having the right, you don't know what you don't know, so getting into the market, having the right team, especially with buy and flip, is very important. But as I said at the start of the show, at the start of our podcast, having the right team behind you is paramount, because sometimes I say to people, you know, the most expensive advice you're going to get is the one that's free, the people that don't know what they're doing. People that you go to experts, that you pay money, that's the cheapest and best advice, because you can duplicate a successful system. And I've done that with the Reventon formula, 3,000 clients. But more importantly, what's a duplicate, and I had this discussion with Ty's, what's a duplicatable process which I can replicate? Because one property is good, two properties good, but unless you buy 10 or 20, you're not going to build wealth, which is what it's about. Cash flow is great, which is what you do, but I also know for a fact you put a lot of your money in real estate and you park it to build your wealth. Sure. You do this for cash flow, and I know Pietro as well had a business. Now he's scaled back in his team and he's focusing more on his portfolio, and I run a lot of people, and that's very challenging in itself. Right. But what you do is probably less hassle. They control your portfolio, but you're growing it that way. 3-4 different strategies here, all of them work. But two things that's consistent, you got the right advice, you got the right team, and you know what you're doing.
Yeah, well,
got to have the team.
Yeah, y'all both made a really good point too with leverage and scalability. And when I was doing the flip model, I was using my own money, and I didn't have very much at the time, and one other seed partner. And so we could only do 1-2 properties at a time, and it drastically reduces your earnings ability over a long time. Now, yeah, like I was making more cash per deal on those.
It's because it was tying up your capital.
It's tying up your capital, and you're limiting the volume that you can do, right? So I had the capital with using our own money to do 1 or 2 at a time, and I built that over 6 years to where I ended being able to do 8 at a time. And then that's when I changed my strategy, and I started partnering and using the partnering to wealth model. And so then I bring in, and I brought in $100,000 investors. So the very first, right? All joint ventures starting out. And so I went from being able to have 6 or 8 properties to all of a sudden having just over $1 million. And with that $1 million and another 60% from the bank, I could go in and I could do 20 deals at a time, right? And so now I could pick up the amount of volume that I was doing. And so with the fix and flip model, yeah, I was pulling out more cash on each deal because I was pulling out 100% of my equity minus the closing costs. However, my tax liability was much larger because in the United States, that's short-term capital gains, right? So I'm on my...
What is the capital gains here?
So it's basically earned income at that point. And so you're on, well, you're 50% basically, 38 to 50.
Because in Australia, what it is, if you sell it
into another deal though.
You can 1031.
Yeah.
If you sell it within 1 year, it gets added to your marginal tax bracket. If it's over a year, let's say I'm on 100 grand and I've made 100 in capital growth minus expenses.
Yeah.
Half of it's tax exempt if I've had it for a year. The other 50,000 gets added to my marginal tax bracket.
Yeah, and if you're holding a fix and flip for a year though, you're doing it wrong. Like so you don't want to do that. So you're trying to do it really quick. And so then I realized that I could bring in partners. I could increase the amount of volume I do. I only pull out 64% of my equity. And so I'm leaving 64% of my cost plus equity, and then I'm leaving in another 40% of equity, but I'm building wealth quicker. And so now I'm doing 10, 15, 20 properties a month, as opposed to 6 to 8 properties over a 4 to 6 month period. And so then I just replicate as quickly as I could.
Let me talk a little bit about, you've mentioned about having the right team, and when we say the right team, it doesn't mean the handyman or the person taking care of the property, or I'm talking about the back office or your professionals that are taking care of you, and tax strategy.
The lawyers and stuff, is that what you're referring
That's
to?
Correct, yeah.
The tax accountants.
Strategy, because you can do all this real estate and just pay it to the government, because that's your partner, man. At the end of the day, the government is your partner. And if you don't go in properly, you got it all wrong, man. You're going to give all your profit to the government, and then you're stuck with nothing.
Well, look.
So you need strategy. You need the right team, and that, you know, I think the team involves the handyman also, but it also involves the professionals, and you know, lining you up, finding out your vision, where you want to go with your future, how much you want to make, and setting yourself up and guiding you so you pay the least amount of taxes.
I'll ask a question to all of you, because having the right team is paramount. There's no such thing, in my opinion, as a self-made millionaire, self-made success. They've got a team of people behind them. You look at someone who wins the Formula One, it's one person driving, yeah? When they stopped the change, it was about 10 people come out. They've got a team of 100 behind them. I think everything's exactly the same. Why do you think it's important to have a team behind you and not just go do it yourself, like become a do-it-yourself investor?
You know, you can maybe do one property and then stop it at that, maybe two. If you don't have the right team, like I said, you're going to pay it in taxes. It's just a matter of time. The government's going to knock on your door, audit you, and they're going to, whatever profit you made, they're going to find a way to take it because you haven't planned it properly. Yeah.
Well, you were talking a little bit about this yesterday, in that your plan for this year is acquiring talent. And that's something that our Key City Capital has done very, very well. That's what we focus on. And we use personality tests when we're doing that. Everybody has a different personality, right? And so I've got a personality that I like my face being out there. I like being the visionary. I like being the one to build our business. But my brother, who is a business partner of mine and has been for 10 years, he doesn't like that. He likes strategically building out a plan for what it is that we're going to do and implementing that plan, right? And that's how our whole team is. But not just our in-house team. We were talking about the professionals. The professionals are equally as important. I'm an accountant. I've got a master's in accounting, but I do not understand the best tax strategies to implement into our business. So one of the most important people in my business is our accountants. And I don't have just one of them. I have multiple. Attorneys. I've got 3 different styles of an attorney, plus a litigation attorney as well. So I've got lawyers, attorneys. So I've got 3 real estate attorneys. One that writes all of our entity docs and all of our structures. One that writes just our deals and underwrites our deals. Another one that does all of our legal work and our documents and all of that stuff. And then I've got a litigation attorney as well. And all of those are vital to our business and to what we're doing, equally as important as the manager that's managing our properties, the construction manager that oversees all of our construction projects.
And you don't know what you don't know, and having the right team behind you, and I say this to the clients all the time, when I say find the right team, a successful team that's in the market. Now, you might have been an accountant or you might have been a lawyer 10 years ago not practicing. Someone that's practicing, that does deals today, that knows today's compliance, today's laws, that's what I want on my team. So when people say to me, Chris, you've got a lot of knowledge. Do you use a team? I said, of course. I've got a full real estate license, full finance license. I'm not in the market all day doing it. This guy does 10, 20, 30, 40, 50 deals a month. He knows the market. He's done 100 deals this year. He's done 1,000 deals in total. They know the market. So having these people, and the reason at Reviton we put it together is because they all know exactly your plan. So why I've brought all these professionals together, what are your goals and objectives? And you've got an accountant, a planner, a mortgage broker, a real estate agent working towards that plan and bringing the convenience together is very, very important, because overall it's going to mitigate your risk but also propel your wealth.
That's right, exactly.
Paulie?
Well done, yeah.
Paulie, what about yourself? Why do you think it's important to
obviously, Revision Homes, my company, is not just Paul.
Sorry, can I repeat what it's called?
Pardon?
What's the name, Revision?
Revision Homes. I know. Yay, come on. But the truth of the matter is, I don't care what business you're in, you cannot scale without your team. And really hiring the best A players, not settling for B or C players and just being lazy and not replacing if you do happen to have a B or C player. You have to acknowledge, remember, leadership is making sometimes the hard decisions. 100%. And then having a coach too. Believe it or not, we're all coached by the same guy, JT Fox, and really truly having somebody with that caliber to really guide you in whatever vehicle or whatever angle you take in real estate, you still have to have that guidance, and scalability is having your team and picking the right.
I have a few coaches, and one of my mentors actually is Len Warson, who owns Glenville Homes. The guy's one of the most rewarded builders in Australia. I've also got Kevin, different business coaches for different people that are in your field, which is important because you're going to learn a lot of different people, but people that have a successful track record to grow it. I'm going to ask you all guys one last question. When you're acquiring talent, for those business people out there, for the ones that want to start a business, do you attract talent that's the same as you, different? What do you do?
If you're tracking somebody that's the same as you, you're going to get the same results as you're getting already. So the talent has to be different. Got to be a little diverse. I like out of the box thinking. So the person who you're attracting has to be completely different.
You know that example with the 9 dots, and they said you got to draw 4 lines.
Right.
Have you ever seen that?
Yeah, with the box.
The only way to do it is to think outside the box.
Outside the box. That's right.
And what about yourself?
So completely different than me, 100%, because we use the DISC personality test in our business. Obviously, all 4 of us here are high D personalities, right? That's just part of the business. And as an entrepreneur, you're going to have that high D personality. If you put all of us in one business and we tried to create a partnership where we were all working on the same goal, it would be 4 peacocks in a room that couldn't get anything done, right? Because we all have these visions and we have these ideas, but we're not going to implement that idea. We need our team to do that. And now I do hire a number of other people that are alike. But then so our property manager that runs all of our properties has a similar personality to our construction manager.
So
and then so they get along, but they have that, okay, you give them a bullet point set of plans and they're going to check the box all day long and they're going to make sure that they didn't miss dotting an I or crossing a T, right? And you need that, and you're going to need multiple, and that's what your managers are, high SC, they're never going to leave you, right? They need that structure, they need that knowing that they have a job every day and their job.
So an entrepreneur, not an entrepreneur, someone that works within a business.
100%.
Yeah, that makes sense.
But then as far as, I do have other investor partners that are a high D personality. And part of that team earlier that I didn't mention is my investor partners and the partners that come in and put capital into each of our deals. Equally as important as the accountant, as the lawyer, because that allows us to grow quicker and to build that volume. And ultimately, volume is a source of diversification. I don't diversify in that I'm doing all different kinds of property deals. I got warehouses over here, apartments over here, single families over here. We're very strategically focused on the type of assets we buy, but when we have a larger amount of capital to buy with, we can do more deals in more geographic locations, and we cannot oversaturate one individual market. So when we hit the 1 to 3% in holdings in an individual market, we move out of that market and move on.
You can maximize your trades, your efficiencies. When you're doing one market, you're getting better and better. You can maximize all these things to increase your bottom line.
Exactly.
But more importantly, like you said, give the return to your investors, because without, you got to treat their money like, well, even more than your own money, because
you gotta protect the other people's money. I don't care what angle, what strategy you have. Those are key.
Respect the money.
Yeah, I think that's the key between all of us in here. Like we would go in and pick up the hammer in any one of our projects if we had to make sure that our investors got the money back.
No, absolutely, yeah.
Like when I've got my clients, I see them and they entrust in me 500,000-600,000 times 2, 3, 4 their retirement. I take that deadly serious. Now I know I'm a jovial guy, but when it comes to what I need to do for my clients or my business,
I think
it's
we
100%.
all are exactly that way. We're excitable. We're like he was saying, we all have that personality to go out there and
really achieve. But we are very, very, very strategic with other people's money.
But not everybody is. Not everybody is, though. There's people out there that
you have to be careful.
They'll talk the talk, but they won't walk it.
So, and you lend money too. He's also a lender.
Yeah.
So you know how it is. Not everybody is equal in this business.
Ask him for some money later, but well, it's very, very important that when you say that, you need to focus. The people that have been around, we've got collectively over almost 65 years experience that have done multiple deals, you find have the integrity. The people I've seen people go, I can't believe I paid money for this course, and I hear the speaker and I'm thinking, how did you invest in this person? But someone that's got a proven track record, that's successful, that lives and breathes it themselves, like the strategies that we talk about in my team or in my company or within myself, I live and breathe them, I do them myself. So when a client goes to me, Chris, what do you think of that real estate? I go, it's really good. Yeah, I'm your neighbor. Tim owns the property here. Penny owns a property there. 100%. So we actually invest there and they go, really? Okay, look up this company. We own holdings in that business. Yeah. So last year I bought multiple properties which we sell from our developers,
Yeah.
which I made a lot of money from doing that, but I'm a living, breathing that my product works, and I know all three of you are. I'd like to say thank you for being a part of the Golden Circle, being my friends, and more importantly, for sharing that great content. I hope you received a lot of value. Here it is from Australia to the United States. Real estate is the safest, most secure investment. Have the right people and the right team behind you. You will become successful, and it doesn't have to be in one strategy. The buy and hold's not the only one. Buying and flipping's not the only one. Doing it yourself isn't the only one. Having the right team's paramount. Go to someone that's doing it themselves. Thank you very much. Thank you very much, gentlemen.
Thank you.
Thank
Thank
you.
you, Chris. Thank you.
Thanks,
Thank you.
buddy. Always fun.